Good morning, everybody, and this is your S&P 500 day trade setups for today. So if you look at what's happening, I mean, we're going nowhere at the moment. I'm just on the weekly chart right now, but yeah, the pattern here, green, red, is pretty much playing out. We've got a pretty interesting and solid area. I'm just going to adjust this level to this weekly swing low. See, that's what holding us up at the moment, and then there's our support area, which is also holding us up. So we need to break through one of those two levels, and we'll get to that on the lower time frames now. But for me at the moment, this is really starting to look like a flag. Now, if you look at the DAX and Dow Jones, it's kind of looking like a consolidation for a break to the upside, and now you've got a divergence view, if I can call it that, on the S&P 500. So your S&P 500 is looking like a bearish setup, whereas the DAX and Wall Street is looking like a bullish setup. It always, when that kind of starts happening, you just got to be very, very careful. So there's our two levels, pretty clear. We do have a little level to the downside here. Well, not little, it's actually quite important as well, which is 39.21. And you're probably another 21 points down to 3,900, as I said yesterday. But look at our oscillators. We are separating, and we're also forming diversions. There's the previous swing low. There's the current swing low. And if you look at the oscillators, you can see I can draw a line there. I'd like both of them below there, but anyway, it is forming. If you're looking at this with other indicators, you will more than likely see diversions forming. If you're looking at this in the sense of Bollinger Bands, you'll see a squeeze starting to form in the lower time frames. And if you're looking at with the Ichimoku, you will see that we are just hovering above the cloud on the daily and sort of got all the bullish signals starting to form. So the multiple strategies are going to give you different views. The one thing that is going to be confirmed on all of them is that you do have a bullish outlook at the moment. Price action is not quite bullish. It's pretty much confused. So it's going to be a very interesting scenario, because what happens now is retail traders will be trading different strategies, and some of those strategies will be to the downside, some will be to the upside, some will be waiting, and then you'll have your algorithms that'll be trading and using the 1 second, the 5 second, and the minute chart and stuff like that, trying to maximize money, and they will be swinging the market all over the place. So it's going to be very interesting to see which way we break. For me at the moment, this is 50-50 call right now. If you look at it there, you see buys that come in day before yesterday, but we drifted down anyway. And then look at our oscillator starting to grip the downside. No diversions here, but we're definitely starting to drift the downside. We still got this flag, and you can see how we're trying to bounce off the top of the flag, but then at the same time we're trying to null and void the flag. So it really is an interesting setup. For me, this is sit on hands, to be honest. I'm not going to lie. The whole week has been sideways. So if you look at that from Monday onwards, it's been sideways. We had a nice run on Friday. Friday was not. Thursday was a big run. Friday was consolidation, but then the rest of the week, consolidation. So we're obviously waiting for some noise, and there should be some noise coming out next week anyway. But for me at the moment, this is sit on hands. There's no reason to risk any money on this. If you look at the 15-minute, you can see we started off moving to the upside, looking to see if we're going to sort of form a double top here. Sorry, not double top, sort of a retest of this trend line. You can see how that trend line is coming into play all the time, and instead we formed a double top on it and then broke, retest, and moved to the downside. So that, from a price action perspective, would have been a fairly decent short there, because there's your stop loss, 172 points, and even if you'd stopped at 172 points, which is around about there, one-to-one trade, you would have made money, but then you can see all these tails. So I have no interest in this, especially if you look back in the week, it's above and below the moving averages all week. So the one thing that the bears are enjoying right now is it does look like a bit of structure, but we need to break below this for me to even be nearly convinced, and that's 39.57. And even a break of 39.57, I think you will be capped over here at 39.21, and that keeps us in between the moving averages, to be honest. So yeah, I'm cautious. I'm very cautious. So we will just sit quietly. I want us to either start getting above the highs of yesterday, but preferably I want us above this area up here at 4,000. So I want us to get a weekly close above 4,000, and then we should see what happens from there. So that is kind of our line in the sand, and that's what you need to just remember. There's 4,000 there. We've tested it pretty much every day since Friday, and we haven't really got going. So the bears are watching that with interest, because that should be, if we can reject this area properly, then you're looking for a continuation, and then this flag has a good probability of playing out, although you'll probably find some decent support down here before bouncing up and then maybe attempting a break. So not going to happen overnight. It's going to take a while to set up. But converse is also true with what the bears are trying to do, just drive us to the upside. So sit back and watch, grab some popcorn, and just watch the fireworks. I wouldn't be wanting to put money in this right now. Anyway, hope that helps, and we'll catch up with you tomorrow morning. Cheers for now.